Hello and welcome to the HI European Market Neutral monthly update video for April 2023. So April was a month when markets regained stability after the concerns and the issues around the US banking, which seems to have gone a bit more rear view mirror. So actually equity markets were pretty solid and the VIX really dropped back off again. So it was a kind of return to normal for markets, and actually probably for us, it was a time when stock picking got a bit better. Clearly this year has been a year where we found stock picking a bit more difficult. YTD, and we regained some momentum this month with a positive return and the feeling that we were getting more of our ideas executed into the portfolio and they were generally working. So that was a good background for the fund. I think we have some specific win areas. US construction is an area that we've been short of through Ashtead, CRH, and generally US housing starts are looking pretty weak. Some of the US construction data is not great. With the CMBS at 11 on building spreads, so you'd think that's looking like an area that's going to have slow starts for most year. That we need to think about that more broadly, but that's been a good win for us. We've also had a few longer term longs like Computacenter reporting well, which was helpful, and the general resurgence in interest for M&A is something that we probably see as positive for market sentiment in the UK. Remember, the UK has been a market that's been seen a lot of outflows over a long period of time. Has generally been a go from the market as people have decided to find value perhaps elsewhere, and allocations to UK equities within UK investors have dropped. Now we're seeing a lot more M&A, and I think when you see more M&A, that suggests that external market operators, so people who are not equity investors, private equity, trade buyers, are seeing value in the UK market when other investors, market investors, are not, and therefore you see a tick up in M&A. And we've seen a lot of bids coming through, quite big premiums, all sorts of buyers, European private equity. We've seen trade buyers, we've seen sovereign wealth funds. So we always bear in mind that the short book, a bid in the short book is always a risk, and that can make a few stocks jittery in the short book. But also clearly there should be some opportunities long to get some M&A. So M&A is generally good news for us. It's a helpful background. Need to be aware of it on the short book as well. I guess one or two other stock specifics that were good for us. Pearson, WP, RWS have probably been all kind of AI shorts. How does AI change business models? Could this be bad news for some established kind of media support names? RWS, bit of a translation play. Google Translate AI, not sure about that. The company probably making their first slightly more cautious comments. So I think a range of small stock specific wins definitely helping us there. And overall, we feel a bit more positive about life. We've posted a reasonable start there in April to Q2, and hopefully we can continue that if this slightly more benign stock picking environment, slightly more supportive UK market carries on. Thanks again for your support, and we look forward to updating you again next month.